Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. I wanted to wrap up this week in a more definitive measure than just my typical shorts. It's been an interesting week, and when you look at the previous several weeks, it all ties together quite nicely. Plus, I wanted to provide a little more context in my own live trading and how that actually looks. So let's get straight to the chart and talk about the nitty-gritty details. Rather than using TradingView, I'm using Oanda as it provides a little more context because I can show the order book and my trades at the same time, as well as support and resistance levels. So let's get straight to it with the first upper yellow line is the top level of the range, which is roughly at 1.089. The range has been shrinking quite a bit, as we can see from the previous candles and when we go back further. Now remember that the range itself is calculated by multiplying the frequency versus the volume. And that range is the outside limit of the highest price it's seen. The same holds true for the lower range, which is now at 1.059 roughly. It also has been climbing, so the entirety of the range itself, the distance between the lower and the upper, has been shrinking into a squeeze position. Now this is using 172,000 price points over the course of the last 30 plus days to see exactly what the market has been doing. And it has been quite busy. Now let's get to the orange lines. This is the order book support line. It is the actual volume within the order book on the buy side. And that is important because that tells you where buyers are looking to get into the market. And now we are going to look at the order book sell side. And this tells you where the buyers are looking to get out of the market. And we can see that today's candle crossed the order book volume sell side, so a lot of buyers cashed in their profits here. That is, sellers did a good job on this point. But now let's take a look at the frequency weighted points. This is where price action has been seen extensively over the last 172 data points or 30 plus days. And we can see that the lower frequency counted range shows quite a bit of activity and shows where buyers have actually been in the market. And here is where sellers have actually been historically within the market, even though they are willing to take slightly less profits in order just to get profits off the table. So we are looking at roughly 3.5 weeks of information here. So let's get into the closer detail of just this week. And here we are looking at just this week. And we can see the order book overlay in the background between the buys and the sells. And exactly at what pricing we can see the strength regarding how well things are working. More importantly, you can see all of my trades that I have currently open. Remember that this is a floating grid strategy. That is, I open up multiple positions at specific interests of the market, and I measure out the number of positions based upon a very fixed scale. And we can tell that the market has been quite busy. It's also been very profitable for me using this technique. The advantages here is that as the market climbed and then went down, as we see from the wick, I bought positions and sold positions, making a very nice, tidy little profit over just this morning alone. Now remember that this is a live look at the market, and we can see that this top position is close to selling off. Once it gets below the second position, it will probably sell off. Whether or not it makes it in today's session or if it picks up in Monday's session, that's a whole different issue. But right now it is on a track for being another profitable trade. Remember that stop losses take place when I reach my full saturation point of the total number of trades in my grid and I want to make a new position. I am using negative finance rates on my own side, meaning that right now shorting this pair will actually credit a finance rate to my account. So holding is a good thing in this case. It's not always the case for every pair though, and you need to study the market to see which way that goes. But as we can see, overall, this is starting to look quite nice. So let's get in a little closer for just the last two candles. And as we can see, the distances, we see some volatility because of the gapping between the positions. But it's not an over-the-top process, and it's not something that's going to really affect my trading in a negative way. If it was a huge volatility jump, then I would have a big gap between two different positions. And those do hurt because I don't get in that extra trade. Overall, I think this week ended up very well. It was a nice, tidy little profit. It stayed within the ranges, and it remained consistent. Whether or not that exists over time is going to be a different story, but I think it will hold. I think when you look at the order book in the background, and you see the overlaying strengths between the buy and the sell side, you see which way the market is going. And right now there seems to be more pressure on the sell side driving the prices down than on the buy side. But we can see though that there are some interesting areas where if price does break the volume resistance level of the order book, then there is a lot of buy pressure. Meaning that if we can get above this region within the order book, if we can get above this pricing, then chances are we're going to end up in another bullish rally. I think that is possible for next week, and I think we might see it, but I don't know how much, and I think the indicators are going to be on the basis of what we have seen in previous weeks. I'm not going to say that it's going to be an over-the-top push like what we saw the last 3 days, but I do believe that if we can get into this upper area, either today or Monday, more likely, that we could see some prices push the upper range. But if we go back further and we look at the longer range altogether, we can begin to see just how stable the market has been. And it's been a pretty consistent stability for quite a while, as we compare the candles to the actual dates of the market themselves. And we remember that we are looking at 1 week increments, the 2-day weekend, and we can see day by day how many weeks we're going back. So outside the early March period, we really didn't have a lot of upper momentum above the confined range we have now. and even then the range was a little bit higher. At this point, the range was in the 1.1 range for the upper part. So we can see just how much the range has shrunk from then to now, and a general idea and gauge of where the market could potentially be going. Now, as we continue looking back, getting more information, we begin to really see that the market has been stable for a very long time. It has been consistent since at least the end of last year. And that is a good sign because that shows that we are in a sideways trend. Now, if you have a situation that only works in a trending condition, then this market's not going to be overly favorable unless you break it down into smaller regions. But if you have something like what I'm using, which is an aggregated or ladder approach, it works exceptionally well. You have a very defined area, and it really can do a good job. And if we even go back further, we can see that the range has maintained a very strong consistency all the way back to, I would say, October or even August of 2023. So we have good indication and good indicators that the range is going to continue for the foreseeable future. We have the order book showing us overall where the buyers and the sellers want to be. So it's an important reference point as we look for the next week, 2 weeks, or even the next month, that we can expect with a good level of reassurance that there's not going to be much movement outside of the range of the yellow lines. If there is, all good, because it's not going to be too drastic or dramatic. I don't think we're going to see this kind of a situation. I don't think this is going to happen at all at this level. I think it's going to continue with what it's been doing, where you'll get a small rally and then a correction. A small rally and then a steep correction, and then now we're getting another rally point. So I think the dynamics for the market have pretty much set in motion, and I think we have a good opportunity for a reasonable level of profitability over the course of the next month. Let me know if you like this deeper analysis better than the shorts. Hit that thumbs up button. Like it so I can try to get this channel to grow and spread information to help give people real value in the market. Please subscribe if you're not. And if you have any questions, please leave them. Let me know what you think of this last week and what you think the market is going to do. What are you hoping it will do? Do you want it to go up in value or down in value? Share your thoughts. Thank you for watching, and until next time.